Hey guys, welcome back. So the market's just closing here Monday, June 1st. So final marks might move a little, but the story was pretty clear. The indices were mostly higher. SPY was up 0.27%, QQQ 0.6%, DIA, the Dow up 0.13, and IWM lagged a little bit there, so down just 0.5%. So it was still more of a large cap tech-led tape than a broad small cap rally. And the main driver was AI and software strength. So NVDA ripped later in the day, it didn't open up higher. In fact, let's go to the 1 hour here, and you can see it ripped at open essentially. After the AI PC chip news, and Microsoft also, that was a big winner today, but that was an overnight gapper. We'll talk about that because anybody who's been following me and watching these videos knows I was in pretty deep on Microsoft and now ServiceNow. So that gapped higher, and the software complex just like kept blasting, and that offset pressure from the oil and geopolitical risk, weak defensives, and weakness in parts of discretionary and healthcare. So tomorrow morning we get JOLTS, which is pretty important because job openings are a key read on the labor demand, and a hot number can pressure rates and growth stocks, while a softer number can help the rate cut narrative unless it looks too weak, and then it starts to trigger recession worries. So that's just that 3D chess game we got to play. In fact, looking at rates there, or TLT, the bonds, we can also look at the 10-year and see how the rates are holding up. We're definitely getting rejections from that 4.5%. So that's all looking good. And hopefully that holds going into JOLTS tomorrow. So today I'm going to do something a little different. I'm going to go through my holdings ticker by ticker. And in Thinkorswim, you can see that you could go to individual accounts, and sometimes they're smaller, but you can also go to your all accounts and see it. And the position sizes might be weird because it's consolidating them. But we'll just try to go through it. And the reason is I'm not here to tell you how to trade. Let me start off by saying this is not financial advice. Do your own research. I'm not advocating for anything. I'm just showing you my own holdings and how I'm thinking about the markets and specific stocks, tickers, and instruments. So I'm not even going to go through how these trades are constructed. I'm just going to use it as a way to do a market review. And maybe we can talk about it. So the first ticker, I actually closed it today, was Adobe. So Adobe was blasting big. I'll go to the daily here. And so this is one of those things where technically I love the setup. We're breaking out of this lower range. But on something like this where we gap up and go a little bit further, I already had a lot of call spreads, so I closed them. I took profit on that. And what I want to see is a retest and go, because this is not confirmation of a breakout to me personally. I mean, it's looking pretty good, and I wouldn't feel bad staying in it. But some of those call spreads, even on Adobe, are still quite expensive when you go far out. So if you have, $4,000 or $5,000 in it, and you made a lot of profit on it, it's good to take that profit. And so I do, and what I'm waiting for is actual confirmation, meaning it comes back down and then it goes back up. That's confirmation of a breakout for me. But the way I'm going to play it, though, is I want to come back in on the retest. Because then that way, if I'm wrong, I have further to fall and my stop loss can be tighter. And if I'm correct, I am playing at the nicest juncture in it for me. So Adobe does look good, and that's part of the re-rating narrative of software versus AI. So that one's looking good to me, definitely on my list. You can see I have an alert here at 260. So if it comes back down, I'm going to be looking for some more call spreads. Amazon, this is a slightly different one. I played it in my cash secured put portfolio, essentially. It's a portfolio where I pretty much only do that and then hold stuff in SGov. But I sold the 220 when this fell today because risk is down 3.47%. I definitely think we're consolidating for a while up here after this massive run earlier in the year, which I loved playing that. I've been holding, but that took forever to hold. I've been consolidating. Everybody thought there was a breakout on this earnings. It came back down, dumped out. It was a long hold. But this is a name I love playing with cash secured puts. And so I sold the 220 right here. But I sold it for $9 roughly. I got $9.05, which means that my break even is actually essentially at $211 because I got $900 for it. So I'm happy to pick this up for a strike price of $211 in December and get $900 in premium. But the way I play these is I'm going to close this if we pop back up. So this is just an income trade for me essentially. Let's go back to the all accounts here and move on. But anyway, just back to this actual ticker as a market review. I didn't see and a clean company specific headline driving it. So I'm treating it as a discretionary mega cap rotation pressure. But anyway, so that's Amazon. Let's go into AQN, which is the next alphabetical holding. I'm trying to go alphabetically, and you can see here that's actually shares. And so AQN is a different play. This is essentially a water play. One of the viewers mentioned they were looking at the next stage of the AI build out and looking at data companies. I'm looking at this water essentially because I think that's going to be very important on so many reasons, not just cooling, but well, actually mostly cooling for sure, but energy in general is going to require a lot of water. And so I'm playing AQN because for two reasons, really. One, if you look at it on the monthly, we're down in this monthly point of control, and this is starting to look a little Wyckoffean to me, which I love playing. And you can also see super trend has broken. And I'm actually, if you look at this is something I love to play. We have RSI divergence, which this is actually right around when I started getting in. RSI divergence on the monthly, that's kind of important, and that's kind of big and hard for me to overlook. Also, you get a whole lot of dividend income on this bad boy, 4.26% for something that hasn't been moving very much away from the $5 strike for the last, I don't know, year and that's 2 years. That's 2 years. So I'm okay with that. I'm parking a lot of cash in that, not a ton, almost $3,000 there. And I'm collecting distributions while I do it. And there's another water play that I'm playing for that. And if you guys want to see any of these tickers, just let me know. Again, not financial advice. I think I've said that a bunch of times, just my own portfolio and how I'm thinking about the market. Do your own research. Don't blindly follow anybody. Don't follow me. Don't follow others on YouTube. Just learn what they're thinking about. So that's AQN, and then ARRNF. I don't really want to get into this. This is a speculative holding in the precious metals, rare earths, essentially, not precious metals, well, some of them, but don't want to cover this because this is not market moving news. This is a long-term thesis playing out. But one I do want to talk about is Asana. So I've been playing, if you guys have been following me, I've been playing Now, ServiceNow, and Microsoft a ton, and they've both run a lot lately. So I was looking for other names that haven't run as much, but have significant upside and have been devalued by the market. And this did great today. So it was a huge winner, up 18%. It was clearly part of that software re-rating trade with investors buying back names that had been pressured by AI disruption fears. And you could see that the volume starting to come alive. It's looking good to me. This is also like, it's not truly a Wyckoff breakout, but it may be. It might just be some type of basing pattern, but the end result is kind of the same. However, I'm not going to be holding this long term. I don't have as great of a thesis on them at the moment, but I saw a technical trade today, and that's up just small on some individual shares. It wasn't worth it for the actual options. I went through to see if I could get some good leverage, and I could not. Okay, so then next is I have BitX. And so what's interesting about this is I don't want to get too far into crypto. This is going to be a long video because I have a lot of holdings here. But essentially, we're coming back into this point of control that's been building up over 4 or 5 months. And so Bitcoin could come down for sure, but I'm liking leveraged ETFs at this specific juncture. So it could sink a little bit, but these are some long dated, and doing options on a levered ETF is like the ultimate volatility drag. But if you do it at the correct times, that's not always true. And we could go into that. There's something called the base effect. I've mentioned in a few different videos. I could do a video on that if you guys want. It's a reason that buying leveraged ETFs works in certain instances, but doesn't work in other instances. So I'm not going to get too far into IBIT, which is really what you should be looking at if you want to be trading Bitcoin on a brokerage, or BTCI. Those are all being held for different reasons. And I've talked about BTCI in different videos about using the distributions to offset the losses, or to have be part of your thesis, so to speak. And the same goes for BMNR. Where I have some options on this. What am I holding? I'm holding 4 options for the January 27th $18 call. And the thinking here is we're going to have a catalyst as this gets added to the Russell 1000. So this is something that's essentially going to trade in line with Ether, but also with some execution and operational alpha built into that. And also because it's being added to an index, I think that there's going to be some institutional capital forced to buy it. So that's looking good to me. Not a real market moving day as far as that goes. Range bound, not doing a whole lot over the last, I don't know, week or so. And then what do we have next? We have Beyond. This is an interesting one for me personally. I am not a meme stock trader, as you guys may have known, but I like where we're surfing right here at the 78% fib retracement from this crazy like meme. I guess it was a squeeze. So I like this level. Also, I do think I had been adding to this position since we went sub $1. The risk reward was good there. It does have good brand recognition. This is a speculative play, fundamentals and sentiment essentially, but tiny bit of technicals again with the point of control on this very large time frame. That's something I like to see, especially when it's that beaten down. But I allocate very little capital to plays like this. But next is Conagra. And I do like this a lot more. You know, there's a lot of people on social talking about XLP trades, maybe not a lot, but a few people are starting to realize how undervalued these companies are. Now, Conagra has some execution problems, operational problems, debt and things of that nature. And I can do a full video on any of these tickers, so just let me know if you want to see any. But I'm parking a lot of cash in there. And you can see actually what's interesting here is, let me go down to the shares. My cost basis is $7.33 on 450 shares. And right now it's trading at $13. You might ask, how have I done that? And what I'm doing is I'm selling cash secured puts below the market with the hopes of getting a sign. So a lot of times I'm doing it at the money because I want these shares. And the reason I want these shares is because I think it's at some very long time frame lows and it's paying a 7.57 dividend. And I'm okay with that for holding this because I do believe in the recovery story. And there's a lot of like air pockets here. So if we get any type of pump there, I'm going to feel good about that and I'll start taking profit on the way up. But I'm happy to hold this as long as something specific doesn't change. And what I really like about this, if you see it here, this is something I might have mentioned on a different name, but I'm making a lot of videos lately, so I can't recall. We have RSI divergence. So we're just getting lower lows, but the RSI is not making lower lows. So I like that. And if you look at it, it may also be on the weekly as well. Yeah, so here we go. This is a weekly RSI divergence. That is something I love to see. Particularly when I'm getting paid to hold it. Now, chances are if you did that around, $17, $18, your distributions wouldn't have been enough to offset it. So that's why doing something down here for a cash secured put is really nice to offset that, or you need a long time horizon, which is what I have for this. This is like a 2 to 4 year trade, at least in my mind, unless we have a huge catalyst, in which case I sell half my shares and let the rest run. Or maybe I hold on because the distributions remain constant, but chances are they won't. They'll lessen in relation to what the cost of the shares are. So then next is copper. So copper had a great day. Yeah, it was up strongly, and it fits the broader commodity and infrastructure sensitive part of the tape. So this was up 2.83% today. I've got $4,000 in that. I've been building it out. I actually think I should have built it out a little bit further, but I have taken profit over the long run. And depending on your time frame, it's really not ripping, but I like it. Again, as part of a few different trades, the precious metals. This isn't really a precious metal, but it's also part of the AI infrastructure, and metals in general have been an interesting trade. We could do a video on that because that's a huge topic. And then iShares core dividend growth. This is just a ballast I'm holding, a few $1,000 in there. It's got nothing to do with today. This is just a long-term holding, so I could skip that. But again, this, kind of flat, down 0.24%, but you can see it's accumulating up here. So I'm okay with that for sure. Maybe it's distributing. We're not really sure. But it's definitely chopping for a bit. To me, that seems like accumulation after a breakout, but only time will tell, and it doesn't matter. This is a long-term holding. So today, I also did buy into DraftKings. What I liked about DraftKings was we finally got above this 4-hour 200 simple moving average. And I've been seeing a little bit of the sentiment change around prediction markets. And so I think that DraftKings was down significantly because of Kalshi and Polymarket and all of those things. But I think as those as the tides turn a bit and sentiment changes in those markets, this can be a recovery play here. So this is a bit more speculative based on technicals. So I'm going to be in and out of this, tight stop losses. So this is essentially a quantitative technical play. I got a signal above point of control across the 4-hour moving average and the 200 4-hour moving average in a long time. And this was one of those ones where it goes moving average by moving average. Like we crossed the 15 a while ago, then the 30. Now we finally crossed the 1 hour and the 4 hour. So it was, signaling something for me personally. So then we go to ETHA. ETHA has been down so much, but I had a lot of cash secured puts. You could see, again, it's down $1,600, but this is over a number of different accounts, whereas I actually am down even more. I'm one of those traders who admits to being down as much as they are whenever they are, because I'm running a few different plays on this, like my actual leaps on it. But I'm okay with that. I'm dollar cost averaging in for this. We don't need too much to move by January 27th. And I think there's legislation that supports my thesis, but we'll see. If it fails, it fails. So size accordingly always. Next is FSCO. This is private credit, but we could skip it because it's part of the dividend portfolio. So it's kind of just oscillating, but it pays I don't remember, 12 or 14% dividend at the moment. Hood. So Hood is an interesting one because I am not in it. You can see right here, I was in it, made a ton of money. You guys may have seen I did a video on my thesis for it about the PDT rule changing. And I actually beat that, meaning I thought the catalyst was going to come later, but then when they announced the Trump accounts, which is somewhere around here, it shot up and I had to close it out because my mandate was that if it reached a certain amount of profit on those, I was going to take it. So I trimmed one and let the other one run. And then when we started getting overbought here at like 90 on the 1 hour, because I was watching it closely on the daily, it was peaking as well too. Yeah, okay, so I wanted to see it break through or pull back before it breaks through. And you can see I have an order coming in if we pull back further. So I still believe in Hood longer, but it wasn't in it today, which is too bad because I was actually out of 2 days ago, maybe somewhere around here, once it hit my mandate. What do we got next? Okay, so gold. This is, I'm not going to cover that. That's in a dividend account. INFQ. This is a quantum name that I'm holding. It's a strong, very strong today. It was up 9%. And this is speculative, quantum name. And so I don't think anybody should be chasing these things, but people are still chasing high beta technology names. But I think that quantum is going to represent more than that. But again, we're at that point of control, $15. I CSPs into this, no trades on it for me, just holding for the long term. This is again like a 5-year thesis. So remember when I'm showing these things, some of these are swing trades, some are day trades. If they're shares, they tend to be longer term trades, and there's reasons because something like this, look at the implied volatility. I don't want to be paying 120% implied volatility for next year for leaps essentially. So I would be doing spreads, but can't get leverage. So it's a lot easier just to buy shares, and dollar cost average into them as needed. And so the next one is IYRR, which is real estate. And we can actually just look at XLRE for that. And XLRE kind of had a pretty big tank today. It was weak. Again, today's trade looked sector driven. It wasn't a broad market rally. And then, but I don't want to cover that too deeply because real estate's a whole big topic, but I do hold a lot of it. So the next thing to look at is Java, JVA. This is one that a lot of people aren't going to know. It's coffee holdings. There wasn't a fresh catalyst. And again, this is just something I'm holding long term. I have a very small position in it. I believe in coffee in the long run. Next, we have CLIP. And a lot of people have been talking about KWeb. And this is one where I actually think the basing pattern is really starting and the risk to reward is quite good on it. So sorry about that, guys. Had a lot of interruptions today, so you might have saw a little glitch there. But KWeb is looking really good to me for a few reasons. One is we're just talking about this before from a technical analysis standpoint. This divergence is exactly what I love to see on the daily, particularly if you're dollar cost averaging into something and then you start adding some leaps. So I own a lot of KWeb actual shares. You could see this is not reflective. I don't know why it does that, but my small account's holding a lot of shares and some of my other accounts are holding options here. So if we go here, I have some near-term options. This is a cash secured put, so I've just been selling that for income. But I have some longer-term options out of the money. Here, 26,000 open interest. This is a hot strike. A lot of people are believing in that. So I've been dollar cost averaging into it, only paying a penny on theta, so 1 cent daily to own that. So it looks good to me. We got to keep an eye on it. KWeb has not been a great story since last October, kind of capped out there. And it's following. I have these channels here, which are standard deviation channels, and they kind of recalculate depending on what time frame you have. And it worked really well for this, although that is probably being calculated by that. So we probably have to go to the weekly to see what's going on here. But you can see, actually, so last October, we had that big catalyst pump here, and we have been getting higher lows ever since then, at least if you're looking at it on the weekly, even though the trend did change at that last hit where I talked about. But I mapped out the fibs here, and we almost have 100% retracement. But if we look at a different fib, which actually could be a really good experiment here, let's get the actual low here, get up to that high. Okay, so we're at the 78.6 retracement, like pretty much right now. Okay, so if it holds this, I'm going to continue to be bullish on my thesis, but this is a longer term play, and I'm expressing it in a few ways. KWeb, I'm doing it through leap options, but I also own a lot of CLIP, which is dividend income, and this is, again, a longer term situation where you need a lot of shares because the distributions are huge. They're like, I don't remember what they are. I think they're like 24%, 22%, something like that. A lot of return of capital, but the good kind. And you're getting paid to hold this. But if you don't want to stomach KWeb necessarily or leaps, that's not a bad thing to look into. Again, not financial advice. I'm going to keep saying that probably more than any other YouTuber, because I really believe you need to have your own risk management, and don't look at any of these trades as my trades. This is just a way for me to show you all the tickers because I'm already holding them, so I can go down in alphabetical order. So then next is KMLM, which had kind of a weak day, actually. It's been down, it lost its trend, but this is a managed futures index strategy. So if you want something that's a bit more divorced from equities, this is a great way to hedge your portfolio. So I add to it based on different moving averages in the equities, bond market. And that's how I hedge my portfolio on a bigger level in some of my portfolios, not all of them. My active swing trading options portfolio, I don't hedge using that. So in this portfolio here, you can see there's no KMLM, but in some of my other portfolios, like my long-term shares, I have KMLM being built out. So anyway, let's go back to all accounts here and talk about some more tickers. So Nightscope. This is another one of the small speculative plays. I've been having a hell of a time, but this is like a 5 to 10 year holding. This is a robotics play. And so I've been building out small robotics plays that I believe in long terms. It's a little bit devoid of the fundamentals, but when people do stuff like that, where they're devoid of the fundamentals, it really better have, like a 3, 4, 5 year horizon. And so this is based on other things like anecdotal observations, seeing their products out in the wild. So I'm not going to go too far in Nightscope. No one else here is probably watching this. Lucid is an interesting one. Okay, so Lucid I've been playing as leaps because I believe in Uber, and they've had partnerships. Let me get off of there we go. Sorry about that. It was the fibs. So they have, it's a speculative EV growth name, and they were mixed, but overall Lucid caught a bid. I'm kind of liking this. We have a bullish engulfing almost on a bullish candle. But what I liked about them was also something similar. When I started getting in here, I saw that bullish divergence on the RSI, and it happened not too long after a crossover. So I like this. I think there's a lot of perspective upside. You got to be careful with these plays. Don't put too much capital into. I have to be careful with these plays, not put too much capital into them. with these beat down stocks, and especially if the fundamentals aren't as good as I would like. But I think that it's a great proxy for playing Uber at the moment, which we'll get to because Uber had a great day and I've been very bullish on it for a specific reason. So the next thing is Meta. Wow, what a disaster of the day. So it was really ugly. It was down 5.07% today, so 5% down. Really ugly. And I didn't see a clean, fresh headline explaining the move, so I'm treating it as pressure from AI spend concerns, but possible confusion around that newer SaaS-style concept they floated and a rotation away from non-leading mega cap tech today. So like a few days ago, they talked about SaaS and we blasted up. And I was holding a ton of shares, as you could see, 125 in this account, which is a lot of capital, but I also hold a lot of METU, which if you don't know about, that is a leveraged play. And so I actually closed a lot of Meta on this big day. And now I've been going back into METU, and the reason you're seeing other Meta down here is because these are long-term shares. I'm not selling those. I actually have a price target of Meta somewhere up at like 750, 780. In fact, if you look at Meta over here, RBC Capital reiterates $810 price target, and there's a lot of higher targets, but I'm not expecting that to be in a straight line. So if I'm buying Meta, I'm doing it with a long-term horizon. So these are long-term shares. And then nearer term, I am getting into METU. So I've just been dollar cost averaging on down days like this. So I'm only down 130 and I have 130 shares. And there's a lot of upside potential on that, even though it's not guaranteed. And because this is a leveraged ETF, remember, you got to be careful about volatility drag. But this has already been calculated for me. So moving back on to the next MLPI, this is another dividend play for me. Energy infrastructure held up, and that has more to do. Let's go back to the daily here, or even the 1 hour, so you could see it. Popped up overnight there, and that has to do with geopolitical, of course. And who else do we have? Everybody was asking about space plays. So MNTS, I still wanted to get in, but I want to get in down here. So I'm not actually in that trade, but it was down today. In fact, a lot of the space stocks kind of cooled off, and we'll get to that because I am holding an ETF. Let's talk about a real winner today, which was Microsoft. It gapped up huge. It was up 2.28%, which doesn't seem like a lot when you say that, but we're basically 3 days ago, we were trading at $4.10 or $410. And we're up today at 460. So if you're holding options, that kind of $50 move is significant. And what you should also notice is that we're above, this is the 200-day simple moving average. So we're up above that, which is relatively significant. And so what I did on this, you can see I have a ton of shares. I have 100 shares here. I cut a lot of them today because I want to lock in some gains, but these are long-term shares, so I'm going to keep 100 of them. But I sold a ton of options. I was levered up on deltas, and I sold them out, and I've gone in some MSFU, which is the leverage shares. And that's, again, I'm not worried about the volatility drag because of the long-term nature of holding these, and because I'm going to be building up multiple lots, so hundreds of shares, and doing covered call strategies on them. So don't read into my trades unless I talk about a specific trade necessarily, but take away from my analysis what you will about the levels and some of the catalysts. But again, this is one of those ones where I want to see a pullback here because this was a double gapper upper, and sometimes they run for sure. But I'd rather be the person getting in when this comes back to retest one of these gaps. And I'd rather be holding something of a much lower notional cost like MSFU while it does do that, and then go in bigger. Or maybe, and you can see I've actually gotten out of all of my calls. But I think that's what's going on here. I have one waiting for it. Right. Okay. So let me show you what that looks like. I do this a lot where basically I was in this at 300, so $30 it shows, but that's $3,000, right? So what it cost me. And today I closed it for like 48, something like that, 49. So I made close to $2,000 on one of those. And so now I've put an order in for good till canceled down back here, roughly where this will be if it comes to retest. I'm willing to get filled on that, and it's long-term, it's September. So, how many DT is that? 109 DTE. But again, that'll be short by the time that happens. So it'll just be an in and out play, whereas the MSFU and my actual Microsoft holdings will be getting me through to the end there. So here's another one in my portfolio, which is MSOS, which is the marijuana stocks, the cannabis stocks. And I'm really liking this setup here. A while ago, Trump was talking about changing the status of these drugs, and we had a huge pop right here. Then it kind of gave it all back, and now it's going back. It's kind of evening out. But when I was looking at this on the weekly, it was starting to look a lot better to me as far as trapping a bunch of shorts down here. So I was liking this. Some small divergence, not much for me on a weekly, but if you look at it on the daily, I'm sure there was even more, or maybe there wasn't. But that's not the play here. This is, again, policy speculation, so it's sized accordingly. It's a very small trade. I believe I'm holding January 27th at the money leaps for... probably didn't cost me very much. I think I'm down a little bit. Where are they? I got them for $2. Now they're trading at $1.42. So down a little bit on those, but I can weather that pain for a bit, especially because when they move quite a bit. If you look at them back in the old times, if I go into the monthly, they used to trade quite richly. Some people are going in on MSOX right now, which is the levered version of that. And I've been thinking about that a little bit, but these do stock splits sometimes, and I have less conviction than I do in my other leveraged plays. All right, let me rush through this. I only have a few more minutes. Might be another pause to get through all of this. So the next one is NASA. Again, space stocks got hit pretty hard today. I think that's just a little air coming out of the sales. And we may pull back down to $32. This is people just probably taking profits as more retail traders go into the space trade. And that's okay. This is a small position for me. I am not in a lot of other space trades. We've done a lot of videos about them. I did do SPCE today, but everybody knows who's been watching this that I'm actually wanting to get in at 5. But today there was a scalp. So something tiny, just because I was doing some diligence on it and I saw a scalpable moment. So that was something a little bit different there. But back to our regularly scheduled program, alphabetical holdings list. What was I? I was at NASA. So yeah, again, space stocks cooled off. All the ETFs like UFO and ARCX were weak today too. So Netflix, this is a long-term holding. I actually believe in the fundamentals of this. And it's one of these classic, if you look at it on the 4 hours, just breaks above, comes back down, and then it's going to surf the 4 hour 200 SMA, I think, for a while. Same thing here on the daily when it finally got back, because this was all from the merger questions, and then this was the pop thereafter, and then it gave some of it back, and it's that's kind of a basing pattern to me on a long-term horizon, but this is a super long-term hold, so I wouldn't read into this play for anything technical today, but essentially there was no action there given today. This is what the trade was down. It was almost flat, 0.2% down. So next is NIHI, which is a NEOS ETF. So this is a covered call income fund. So I'm not going to cover that today. It's not really about the technical analysis or the catalyst. And then now, oh my, this gapped up huge today. Okay, let me go to the daily. I took a lot of profit. You guys all know I was holding a lot of deltas, and yesterday I took a bunch off. Now I'm out of all of my calls. I have an order in for one down here, or it's showing 2, but it's across 2 different accounts. But I am in now L, which is the leveraged ETF, and this is exactly where these things do really well. You can see I'm up $1,200 on that, and I started cutting some today. I had quite a bit more shares, and this was just the cleanest expression of today's software rally. In fact, if you look up the news about now L is what I was trading, but it essentially you could just read about some of it. It's staging some of its best rallies it's had in a long time, but a lot of it's because it was beaten down, but also their earnings were great. So I love this, but I do think we may range for a little bit before we blast. Although it's better to look at it on actual now. I was thinking that we're going to need to get above the 200 here for me to feel like I can just buy shares and chill. I mean, I probably could, but I think it's going to come down and retest beforehand. So I'm watching that one very closely. I'll probably do a dedicated video on it as it starts to cool off. OWL, this is private credit, long-term shares, getting paid to hold down in a basing pattern. This is something I really like. In fact, if you look at the analysis of OWL, you're getting paid almost a 10% dividend. And again, this is private credit, so it's really beaten down, but I'm seeing a great basing pattern that I like. I'm also seeing RSI divergence on the daily, all really great patterns that you've heard me talk about all video. So Path is next. Oops, let's get those emojis out of here. Path is looking really good because we did close above the 200 SMA on the daily. So I really like that. I have a bunch of leaps on this for January 28th, $10 call. Those are feeling really good, especially after their earnings. I don't know if you guys remember this, but they had earnings a few days ago. Over here, they tanked and then people bought them right up. So I'm loving how that's looking. And it's low enough notional value that you don't have to put too much capital into it. Okay, Pfizer next. This is similar to the Conagra play. They're at generational lows. I mean, this is the weekly, and that's only 3 weeks. If we go to, 3 years on the weekly. There we go. This was COVID, I believe. So they're down pretty far. They have a great dividend, but they have some cash flow problems and some dilution problems that they might face as they try to buy back shares if they do, but they have debt issues and the revenue isn't strong enough. But they are holding these fibs nice that I've been watching for a long time. And so and if you look at it, we're in an uptrend. It could be a weekly bear flag, but that's not how I'm reading it. I'm willing to get paid to hold this. But I do have both shares and leaps depending on the account. But PFE wasn't really a healthcare day today. Healthcare was lower. If you look at XLV in general, XLV was down 1%. So it wasn't the day for that, but that doesn't mean it's not something to be watching, and I'm liking that particular name in here. Then we have PFFA, and this is preferred shares income ETF, so I'm not going to talk about technicals on that. The same with, I hold QQQI, that's blasting with QQQ for sure, but again, the technicals are a little bit different. It's covered call ETF for income. QUBT, this is a very small position for me. You see 15 shares. That's because it's in some kind of retirement account. This is a long-term play, 10 years kind of thing, 5 years. Same thing with RGTI. Now, but I actually really like this. If you're looking on the weekly on my super trend indicator, we finally changed trends on the weekly, and there was a crossover not too long ago. So I am liking this. Also, I looked at a bunch of the GEX exposure on it. I was liking where we were. And, it's interesting because this was positive today, and it's the same quantum and high beta technology theme I was talking about before. But look at this. This is a proprietary GEX code that I have, but I'm targeting the 30. So I've also bought a bunch of calls on this, and I'm targeting the 30 strike as my exit for those, but I'll continue to hold shares, and I may put some of my profits towards shares or sell some cash secured puts with the profits, as collateral for selling cash secured puts. And then Rivian, this is kind of a little goofy one, but again, it's similar to my QUBT. I like it. It's breaking above. Interesting. So we had a spacing pattern here, and if you look at it on a very long time horizon, there is a trend line forming. And to me, this is the kind of thing. If I can get one of these points, it's hard. Yeah. So it's all above that line. This is the kind of institutional buying that I would like to see, and now we're popping above the weekly 200. That's pretty awesome. So I think it's a long-term thesis. These are just I think I'm holding 5 shares at the moment of this one. It's a feeler. Make sure that my thesis is right, and then go in a little bit longer. But I've made a lot of money selling cash secured puts on this, and that's actually my favorite way to play it when I notice some kind of trend like that. Because it doesn't make sense. Say you had levered up and bought a bunch of calls on this. You've been bleeding theta for like 2 years. So that's not how I would play this one. Sentinel-1, this is also kind of a hybrid thing. It's not showing my shares for some reason down here, probably because it went 25 shares. That's kind of odd. But I am also holding a lot of calls on this. I got 4 calls here at what strike are we at? And what is our, if we look at it here, it's for January. At the money, basically 61 delta, 1 cent theta. So I can hold these for a while. I'm only getting charged a penny a day for owning 60 shares times 4, 240 or 244 actually. So a lot of delta there. And we're coming up into a bit of resistance, I think. So you just got to be careful on those. And I just need to pause the video for a second. I will be right back, everyone. And sorry guys about that. I'm back. There's a lot of action going on today at my domicile. Yeah, S is looking good to me, but this is a long-term play. It's had quite a run here for a name of this size, but this is an acquisition target for me, and I do believe in cybersecurity. And cybersecurity and software were both working today. In fact, recently, I don't have any now, but Zscaler, I got in here at this change of trend and rode it up to about 170 and then got out, which is good. I missed the last end of the move, but I didn't want to be in for earnings. And then I sold some cash secure puts after we dropped. But cybersecurity is worth watching, in my opinion. Again, not financial advice. I don't know how many times I've said that. This is just educational purposes only. And next holding, QUBT. This is just a long-term holding. This is like, a dividend equity ETF. This is nothing. I don't trade this, but it does show you something interesting. That quality is starting to come through here. And I think we've known that since the start of the year. But it's continuing that trade. I think it's going to even out for a while, but it may not, and I'm okay. This is just a never sell, right? QUBT, same thing, never sell, but this is US large cap growth. It recovered with the market when the first relief happened from the Iran war. So that's what's going on there. Then I have another robotic speculative name, which is Serve, and you can see it's been accumulating for a long time. So this goes up and down. Some days I'm up, some days I'm down. Not a lot of news there. Robotics and automation names did catch a little bit today. This is up 0.75, but it wasn't, the true move that we saw in software. Then everybody knows I hold a ton of SGov. This is just actual cash. It goes up every few days, and then it goes down. It was the start of the month, so it's way down here. And then they pay you out a distribution based on how much money you have, and then it goes back up. And this is basically a savings account for multiple accounts. Then I'm holding SMCI, and I'm up pretty big on this one. I think I'm probably going to trim, to be honest with you. It was in a long-term account, and I got in right here, I think, when we had a change of character, or sign of strength, actually. It's just really a change of character. I think here's the sign of strength where we broke out, so we're accumulating, we dump out, it's a spring, we come back in the accumulation zone, try to break out, come back in, and then blast off. That is like so Wyckofian. I love it. But now we're getting a bit overbought for me for this particular account. I'm actually probably going to close that. It was a nice bit of profit. Probably close that sometime in the morning. I guess I could probably close it now. I got 100 shares there, and I think it's probably time. What are we trading at? 37 and 40. Let's see if we can get filled at 39. You know what? I probably have to be in the exact account that it's in. There we go. And it's also harder to get filled after hours on these. Probably not. Oh, market makers playing goof. See what they just did to me? All right, now we're out. All right, cool. So I booked a nice profit on that for the day. So SMCI, the thinking was, AI infrastructure names, they're going to benefit from NVDA, but I think this has had its run for the moment. I'm waiting until it pulls back, and here's where I'm going to set my alert. And if we come back down to 30, we want to do it before it gets there. If it comes back down to 37, I'm going to get an alert and rethink about this. That would actually be roughly where I want. I don't think we're going to get there tomorrow. All right, so that's SMI. My next ticker to talk about is SMR. So it's up about 3%. No, it was only 1.7%. I think it was up higher at some point today. And so nuclear power and infrastructure names are still tied into the AI electricity demand theme, which I really like. In fact, I was in another name today, but I closed it, which is APLD, Applied. And I got out when we kept bumping up against 50. And I said, that's enough because this is run for a long time. So I'm good on that. But that also has to do with the same theme as SMR, except SMR I think is going to be a longer tail. This is small modular reactors. New Scale is the company, and they make modular reactors, nuclear reactors. And I have shares in a lot of the 110 shares. I have some leaps as well. If we get a pop in the near term, which I think we could actually, this is following the pattern. And what I like about it is well, a lot of things, but I think that's where we're going to get that bottleneck. And this is the only one that has a certain approvals of all of the nuclear names. So I like it. Let me know if you guys want to see a video on this specifically, because I actually have a big dossier about the fundamentals and why I liked it originally as I've been accumulating it. I'm not expecting big moves now. Like I said, 5-year time horizon, maybe even 10. And then SOX. So this is the daily semiconductor bear 3 times leverage semiconductor ETF essentially. And this is starting to act like my new hedge. You can see that I'm down like $400 on this. I've been adding to it, selling calls against it. So it's been making me money actually in various accounts. But I have a thesis long NVIDIA, short semiconductors. But I'm out of NVIDIA at the moment and just shorting semiconductors. And it's more of a hedge than a short at this moment. And in fact, that's how you should think about it in my portfolio. I need to pause one more time and I will be back. All right, guys, sorry about that. A lot of distractions today. Like I said, people coming in and out. So next in the holding is SPY. And so SPY is, for me currently, it's a hedge. I have a lot of different holdings like SPY M, which we can get into, and that's just like long-term hold portfolio, never sell kind of thing. But my portfolio is kind of levered with a lot of options. And so I need some downside protection. And like I said in one of my other videos, I'm starting to see RSI divergence here. And so that starts to worry me. So in those instances, I tend to buy a long-dated put for some protection. Honestly, this isn't full portfolio protection. It's only 36 deltas and I'm paying 9 cents a day to hold this in theta. So you have to be careful, but it is 137 days out. And I do think it's likely that we could fall to 740 by then. I actually think it's more likely we fall to 715, if not down to 700, 690, if we have a real pullback, which wouldn't surprise anybody after a rip like this. So that's just some protection. Otherwise, I told you about SPY for the day. It's up 0.27%. It's not bad. And my other holdings like SPY I, it's not letting me go through, is just a high income ETF through covered calls. And SPY M is a lower notional value S&P 500 ETF, which is just in my long-term holdings. So that's like a never sell kind of thing. Just add to it when the market's down. And then we have SIM, which is Symbotic, and this is a robotics play. We've talked about a few, and so it was up today. It was about 4.25%, pretty good. Automation and robotics exposure. It worked today with the broader AI theme. So I'm loving that one. From a technical standpoint, we are finding support down here, which is probably, if you look at it on the weekly, the top of some institutional buying. So this is like a great accumulation zone for me. Even though the RSI is slowly going down, it's just nice accumulation, but no huge catalyst for it. It got a few when it was announcing things with Amazon, but I'm still liking it as a long-term hold. I don't know why it's only showing 10 shares, which is kind of weird, because if you look at it down here, oh, maybe it's just because it's that particular account, because I have, there we go. Well, it's, apologies guys. When you go through all accounts, like I said, sometimes it shows a bit odd there, but I have a few calls on it as well. Again, long dated. Yeah, I don't know why it's not showing. Okay, anyway, let's continue on. So TE, this is a name that I actually long-term holdings are showing, and I got this right after we broke above. So you can see, let's see where my TE holding is down here. $3.78 is my cost basis. So somewhere around here, I got it probably when we came back down below. Yep, 375 right there. You know, retested the 200 SMA on the weekly is a really good level, and this is broken out above previous resistance. So I'm liking that, but this is a longer term horizon. So going in blindly here is probably not like the best swing trade in my opinion there. And then TLT, this is something I've been holding a lot of in a lot of different accounts. And if we're lucky, this is an island reversal where you have all these people accumulating down here. This is such a great spring for me. If we can come back in and break above this, it's going to feel good. But this is essentially, you know, a rate play. So what we're really hoping is, I mean, it's much more complicated than that. And let me know if you want me to do a full TLT video, but essentially, I am assuming the market has underestimated the likeliness of a rate cut. now, especially now that oil might not be at the highs forever. I think it's going to take a lot longer for that trade to unwind and for everything to go back to normal after the conflict. But I do think that TLT has been undervalued, and we're just trying to see some shakeouts here. But it could also continue lower. You never know. But something I do like about TLT is you're getting paid the dividend, and it has some tax advantages. So I'm playing that in a number of ways. TLT, I also have a long-term holding in TLTW, and this is paying a really nice distribution. You go look into it. It's a covered call, like acceleration on top of TLT. Very low cost. I hold a lot of shares in my dividend income portfolio, but I'm also playing TMF. And that's because as this thing starts to pick up steam, it's going to expand a little bit more like how an option expands, because it's going to compound as the leverage. It's a 3 times leveraged ETF. So that'll start to pick up some speed. The only problem is if it starts to chop around, it's going to have some problems. But this is actually a great one for shares, in my opinion. So I have a lot of shares of this, as you see, but I also have a number of leaps on it that I dollar cost average into. But those are the ones where you have to be like very aware of how much theta you're burning based on the volatility drag of this. So that's that. And then Uber it's been a great play. I was talking about Lucid and how it goes up with Uber, how it's a proxy, because if you look at all of the really large hedge funds filings, there's a lot of interest in Uber, and their fundamentals are great, in my opinion. Now, I think if the consumer has some weakness, this could have some problems, but I was selling cash secured puts below it to get assigned to some wheels, but I'm also holding 2 different leaps at 2 different strike prices, and they're performing well. Today was actually particularly good for it. Uber was up almost 5%, and so the catalyst today appears to be the robotaxi partnership headlines with AutoBrains and NVDA, which fit perfectly with today's AI tape. So was loving that. And if you look at it here, it's not great on the fibs. We have a complete retrace. Actually, this does not look correct to me. I'm not sure. Oh, I see. I input the fibs incorrectly here. This was from top to bottom. So it's not, no, actually it's right. Well, anyway, point is we're at the lower bound of the range, and this is on the weekly, which is not what I was trading this on the daily. This was starting to look good for me as an accumulation. We had this trend line that we broke across, multiple trend lines, in fact. I do think it's going to chop around for a while, so it's just something to be conscious of, but I am liking how the strength is coming back into it. So to me, it seems like we've hit the stop and now we're in accumulation zone. And again, this is more to do with trusting 13F filings and coming up with a strategy around that versus how their actual fundamentals are. So let me know if you guys ever want me to do a fundamental analysis on these, because I do a lot of that before I get into it. Also, let's see how the GEX was on Uber, because I think it was looking quite good at the time I got into these, because that's essential when I'm developing a trade here. So we're above the GEX line, and you can see there's a lot of interest later in the year. And I have a base case of if we fall below 70, I'm probably going to rethink my strategy here. Originally, 65 was where I was selling CSPs, and you can see at some of these pivot points, I just moved my fibs. Got a lot of people trapped down here, but at 65 was where I was selling CSPs before, and I'm sure that was based on the weekly. Probably lower range of this accumulation zone, somewhere around here. Actually, I know what it was. It was the 200 SMA catching up to it. So I would be okay acquiring them at 65. So next is uranium. We've already talked about nuclear a bit, and this is just a long-term hold. You can see a very few shares, just been accumulating on down days. And today it was basically flat, down a little bit. It was up higher at some points during the day, but, not part of the AI theme directly in everybody's mind, but I think it should be. So it's something that I have been playing. And then Visa, long-term hold. So nothing exciting here. And in fact, payments were not really the leadership today. In fact, I did skip one. I don't know how we missed it, but PayPal. So what happened here was we changed the trend yesterday in a really great way. And there was actually some news today, but FinTech had selective strength. And what I liked was we pulled back hard into I'll do a video on this if you guys want on pivot points, but we came down to the main pivot point. And I went long on calls right at that juncture today. And this is just a trading range play. I think PayPal has been really devalued. What happened to Visa earlier in the year happened to PayPal as well, which was people having less faith in payment networks because of AI and crypto. And it seemed unfounded to me because of the network effects of these companies. And PayPal was a really great way to express it. And look at that. I mean, if you had been in this since 2022, not much has happened, except if you do look at it again on the monthly, I am starting now to see RSI divergence. Very, very slow one. But if it holds, that would be interesting to me. So this is sized very small. I think usually I'm doing 2 leaps so that I can scale out. I believe I didn't even have the conviction to do that. In fact, let's look at over here. What do we got? No, I did. Okay. So I bought 2 leaps on that. Good price. I calculated the leverage on them. And these were going at a good price at the time at which I got them. What else do we have? So then the other one is Water G, which is actually Essential Utilities. And this is the same play as AQN. Okay. So not much to say here, except that this isn't a technical trade. I'm not reading it for that. This is a fundamental trade at a good price with a multi-year story. So if you want me to do a video on water stocks, I'm happy to do that because they are a very interesting thing if we're trying to stay ahead of the market. Next is XPEV. People have been talking about QUBT, but I really like it's actually XPENG, but XPEV is the stock ticker and it's an ADR. So you have to be very careful about how you understand global macro, especially in China. But this, was strong today. It was up almost 4.5%. And, it's a Chinese EV and China growth exposure. And that worked today with that QUBT bounce. But this has been doing really well in the last week or so on its own merits. And in fact, this one was one of those ones where I got in through a cash secured put and got assigned at the lows, but I've been farming for a while to get assigned down here. And then the last one is Xylem, which is a water play, but it's also a like AI tech play. It's water tech essentially. And again, I don't want to get too much into water, but I could do a video on that if you guys want to see it. But it was soft today. It was down 1%. These are long-term plays. I have, I think, 200 DTE option on that. But these are a lot less liquid than, which is funny because they're water, than a lot of other options. But again, I could do a video just on that. It was a good place for me to get in. I think I got in back here maybe, and maybe one way back here when I didn't think this was going to break down, which is again why we do such long dated options, particularly with something that's as volatile as this. In fact, if you look at the weekly, the ATR is $6.57. We actually are at the bottom of this accumulation zone. I'm liking it. Yeah, so that's that. And so today was a really long one. So the quick read's this. Today was not really an everything rally, okay? It was AI, software, automation, quantum, and select growth. And I didn't want defensive staples, or not me, the market, didn't want defensive staples, utilities, healthcare, real estate, or long-term bonds. And, the biggest things I'm watching tomorrow are whether the software rally can continue. And particularly if Meta stabilizes, I really wasn't loving this move here, but I think that's a shakeout, to be honest with you. A little liquidity grab, if you will. But we'll see. I've sold a cash secured put on this actually in one account that's down at $520. If we get down there, I'm absolutely happy to have it. But I'm very curious as to why it would go that far. And I think something's going to come out soon, or this is just a liquidity grab / technical, a function of the market there. Because as you see, we didn't really lose this, but we could. And in fact, if we look at, that's the last thing to look at. Let's look at its GEX there. Yeah, we're negative GEX here. So I could see that continuing just for a little bit, but once we get above it, it should be pretty sweet. So yeah, watching Meta tomorrow, and whether the space trade continues to cool off, and specifically, guys, got to watch JOLTS, which is another reason I am hedged up. But I'm always hedged up because you saw how big my book is, or my multiple books. Yeah, so thanks for watching. Happy trading, and please leave a comment, subscribe, and let me know if there's any other tickers you want to see. And sorry for all the interruptions today. I'll see you guys tomorrow.